Hey everyone, Rob B here with Rob D. And you, of course, are listening to the Property Podcast. This week, we're very lucky to have Lisa Orme back on, property expert and mortgage broker. And she will be sharing this week what makes the very best property investors and also the strategies that she really does rate, but also the ones that she thinks are completely overrated.
Welcome to the Property Podcast, where every Thursday morning, property investors come to be informed and inspired. We've got another great episode today. There's going to be so much for you to take away from this one. You may want to have a pen and paper at the ready. And make sure you stick around to the end for Hub Extra, where we've got another podcast recommendation for you as well.
So from nobody talking about a property boom, it doesn't seem to be a week go by at the moment without more news around that very subject, a property boom. And it's easy to understand why that is happening when you see reports like this. This week's news story comes from the BBC News website, and the headline reads, "House prices rise at fastest rate in 17 years." It's pretty eye-catching. So each and every week, it seems the story comes out, but each and every week, it seems to supersede the previous week. There's a lot happening in the property market now. There may be some signs of a minor slowdown with stamp duty coming to an end, but it'll be a minor slowdown, Rob, because this seems like a runaway train at the moment. Things are just booming.
They are, and even after the first stamp duty deadline passing, I'm still hearing anecdotally lots of people saying, I'll put my house on the market and got multiple offers on the first day. So that doesn't seem to have cooled it down. Also, if you look to what's happened in Scotland, the Scottish stamp duty holiday came to an end earlier. And since then, the market has not slowed down up there at all. So if the same factors are in play, which you'd expect they would be, you'd expect England to follow suit. I still don't know if this pace of increase can be sustained. So you might have a slower rate of increase, but no sign of things going back in the other direction.
Yeah, and it was only in May, episode 426, that we recorded an episode called "We're in a Property Boom. Why has nobody noticed?" Well, it seems that people have pretty much noticed. Maybe that was the catalyst, that podcast going out. Possibly not. But that podcast, if you've not listened to, is well worth a listen, because obviously we're talking about the boom, but we also talk about why there is a boom. So if you want to understand why all this is happening, that's a good episode to listen to. Now, Rob, we do lots of podcasts, you write books, we have a magazine, we have a forum for investors to talk to each other, loads of stuff that we do, loads of education out there, obviously YouTube as well. But you think that's it? Well, no, there's plenty more. And one of the things we've not mentioned in a while is that we do free webinars as well.
Yeah, and if you haven't checked out the webinars for a while, then you should, because we've got one which is kind of an intro webinar that runs all the time, but we've also got another one which changes every month. So if you think that you have attended all our webinars, you probably haven't, because they do change. We make it really easy for you to join. All you have to do is go to propertyhub.net/webinar. That's propertyhub.net/webinar. And there you'll see all the details of the ones that are running at the moment. And there you'll see all the details of the sessions that you can book for at the moment. They're short, they're snappy. You don't have to listen to someone waffling on about how great they are for half an hour before you get started. You don't have to worry about a lengthy sales pitch at the end. It is just more property education for you. So head over to propertyhub.net/webinar and check it out.
This week, as we said, we're back with Lisa Orme, a property investor, mortgage broker, and, because of all of her experience, expert. And what we're about to hear is her share what makes the best property investors. Now, Lisa has interacted with hundreds of property investors over the years, and she's got to witness the very best and the very worst. She's going to talk about the traits that those best investors have and the type of actions they take. And then what's really interesting is Lisa then shares what property strategies she thinks are overrated, but also underrated. It's a great episode.
Being a mortgage broker, you get to see what lots of other investors are doing, which must be really interesting. How do you see your clients thinking about the market, and what moves are they making at the moment? I suppose especially those who are more experienced and have been around a bit and maybe have a different perspective from someone who's just starting out now.
Since Section 24 came in, the reduction in mortgage interest relief, we've definitely seen a split. There's sort of two clear marketplaces almost. One is the experienced investor, and they are very much in this for the long term. It's a business. They typically are full-time in property. They've moved to other strategies. So a number have incorporated and moved their portfolios into limited companies. Certainly buying in limited companies, any new properties. These are the ones that have moved into other strategies such as HMOs, serviced accommodation, holiday lets, conversions, development, rather than having just buy-to-let portfolios, have been looking at ways that they can maximise their cash and expand into other areas. So that's the sort of one market that we've seen. And the new people that have come along, they don't know any different. Yeah, so if they want to get into property, they are just accepting the way things are. They'll make changes. A number of them will buy in a limited company, even if it's their first couple, may or may not be the right thing to do, but they will go straight for the limited company route, or they'll be proportioning the property differently, like amongst a husband and wife, if one's a lower rate taxpayer. So there's a lot more thought going into positioning the property and the ownership and thinking about that long term. But they've chalked up the fact that there's a 3% stamp duty surcharge, but they still believe that property is a great investment. I've been working with a lot of younger people with my other project, and the sort of under 35 age group. There's a number that want to get into property in terms of their own home. But generally, like 80-20 rule, is the vast majority just want to get into buy-to-let. They're not even bothered about getting their own home. They see property as the only way they have of getting any form of wealth. And I'm not talking about multimillionaire status here. I'm talking about just literally getting some sort of pension, something for their future, something that they might be able to hand down to the kids, or something that they can, trade a few times over the next, 10 or 20 or 30 years and move their way up the property market. Taxes and stamp duty and all of this are just so far down the line of their thought process. It's just, let me get on the property ladder. They don't trust the banks. They don't trust the stocks and shares, the market. We've all seen how manipulated, Bitcoin and alternative currencies and all of this can be. One person puts out one tweet and the whole bottom falls out of the market. Thank you, Elon. So, they don't trust all of these things that are going on. They might dabble, but the only thing that they see as giving them any sort of control is property. They can see it, they can touch it, they control who goes in it, they control when they buy it, when they sell it. So the under 35s are totally obsessed about property and either getting on the ladder themselves or getting a buy-to-let, and particularly getting a buy-to-let. So, as I say, we've seen the market very much diverge amongst those two marketplaces. Before, it was the Mr. and Mrs. Smith at the dinner table type thing, and the keeping up with the Joneses, and everybody had a buy-to-let property type thing. There's a lot of those people that have left the market or are just sitting tight, or certainly wouldn't buy another one. After Section 24, huge numbers of our sort of existing client base that saved up, bought another buy-to-let property, maybe remortgaged every few years or so, and then went and bought another one. That market has all but disappeared in what we're seeing, and particularly what I see on social media and the people that I'm talking to. And it's definitely diverged. The younger ones wanting to get in, accept the way that it is, and the more experienced one, the full-time landlords, property investors, diverging into other sectors.
Say you are serious about property, in it for the long term. We know that at some point there's going to be a crash. We don't know when. That would be nice if we did, but we don't. And the other thing that we know is that after a crash is the perfect time to be buying. If you can take those couple of years afterwards and when absolutely no one else is interested, that's the best time to be getting in. With that in mind, if you are taking a long-term view, how do you think you should be playing that? You could take the view of, should I be piling up as much cash as I can now, pulling out as much equity as I can now to be in cash to go on a buying spree? Or is that risky? You go, well, actually, I don't want to get caught out by the crash, so I should be paying down my debts. Is there a way of finding your way through that one?
I think my biggest tip that I would give is to get one, if not more, but certainly one unencumbered property. And I would aim for that. I've wrote an article many years ago. The best property an investor can own is an unencumbered one. And I still maintain that, and I still put that article out on a regular basis. It's a lot of people will make overpayments, an extra £100 here or there on their individual mortgages, set up an extra standing order, £20 a month or whatever. Don't do that across all of your mortgages. Pick one property that's going to have some decent value to it, obviously depending on your area, but something 100 grand plus for most people would work, and aim to get one unencumbered property at the very least as quick as possible. And while interest rates are so low, you can have a really big impact if most of your payment, most of your rent is just interest, then trying to find that extra little bit, becomes tough. But with interest rates so low, I'm still seeing landlords with mortgage payments that are like 75 quid a month or something like that, because they're on these ridiculously low old tracker rates and things. These are the properties, if you want to grow, if you want to pay off your mortgages and, hand them to the kids or live off the rent or whatever, and you've no intentions of growing, then, that's absolutely fine. But if you want to be ready to pounce, get an unencumbered property and do it now. So while, rents are increasing and certainly on the up, interest rates are still very low. So pick one of your properties and chuck everything at it. Any extra money that you get, any extra bonuses, anything like that, just chuck it at that one property and get an unencumbered property. That then becomes incredibly powerful. You can create effectively your own bridge. Bridging is expensive. So you can either then remortgage it back up at the time. You won't, if it's unencumbered, you won't have to worry about rental cover or anything like that. You just take out as much as you possibly can. Now all of a sudden you've got a slush fund that you can use and you can go out on a spending spree, or even better is actually use it as bridging security. Yes, while bridging is expensive and it would be cheaper to remortgage, the great thing with bridging is that you only pay for it while you're using it. So if you go and remortgage, you're paying for that every single month. If you go and it takes you 6, 9, 12 months to find a property, why would you want to be paying interest on that? And then, so you can use that property as the deposit, as the equity, even for works, with your new purchase, bridge across the two, refinance, take out the bridge, off you go again. It really is, if you get your numbers right, absolute perfection of rinse and repeat. Everybody talks about BRRR these days, and that's the new sort of trend. But this is creating your own bridging structure. So now is the perfect time to do it, so that you can get yourself an unencumbered property that you can then take advantage of these opportunities when this market, which as we all know, will come along at some point. But, you might get a deal in the meantime, somebody's, desperate to sell or whatever, and you think, oh, if only I had, the money to do that. Getting yourself an unencumbered property is the best way to take advantage of these type of things. So I definitely recommend doing that.
Okay, let's finish with a quick game of overrated, underrated. Of all the property strategies out there, of which there are many and lots are talked about on social media all the time, what's overrated in property for you and what's underrated?
Overrated, I would say things like the serviced accommodation, short-term let market. I don't think people estimate how much work is actually involved in that. If you're a long-standing landlord with a portfolio, we all know our heart sinks when a good tenant gives notice, and you're like, oh God, I've got to get a new one, blah, blah, blah. I cannot even imagine the thought of doing that every 24 hours, or every week or every month or whatever. Oh my God, the hassle involved in that. And when I see people, putting posts on Facebook or social media saying, I've just found out that my latest tenant has vomited on the mattress and I need a new mattress within the next 24 hours because I've got new tenants coming in. Oh my God, I can't even imagine the hassle. I think it's a classic case of the numbers look great. It's the usual sales pitch from the front of the room. Everybody talks about all the great things until you actually get in. Rent to rent, very sort of similar. I've never been a fan of rent to rent. Don't get me wrong, there's some really good operators out there, but that's another strategy that's seen very much as basically a cash cow. Don't need any startup money, all of this type of thing. Like I say, the short-term let serviced accommodation, I see so many people get into it. And also, interestingly, we get a lot of clients who say to us, oh, I took this out on a short-term let product. Can I let it on an AST now? So we see, and they've probably paid a premium for that in the first place as well. And so I see a lot of that, and again on social media. So yeah, overrated would definitely be the short-term let market and still the rent to rent, which I'm not a massive fan of. Underrated, Well, firstly, I'd say just standard buy-to-let. Everybody's looking for the cash cows and all of this sort of lot. And I think over the long term, which is what property is really about, you can't beat people who want to stay in your property and make a home of it and be there indefinitely. I often comment about not our first ever tenants. Our first ever tenants trashed a brand new property, didn't pay rent for 18 months, cost us about 30 grand in repairs and lost rent when we finally got the property back. But our second ever tenants, so we had a baptism of fire with our first, but our second ever tenants are still with us 22 years on. They've actually moved home with us 3 times. So they started in a little terrace and then moved to a semi and lived in a large detached for about the last 15 years or something with us. They had 3 children and we've housed all of their children as they've grown up in other properties, and then they've moved on. So, you know, to have tenants like that over the long term that have always looked after the properties, never missed a payment, and you've housed their children and they've moved with you is just the perfect scenario as a landlord. So that does exist if you find the right people. Long-term buy and hold, I think, is severely underrated. And just sitting, waiting, letting the market do its thing. If you have a dip, just sit and wait it out, and then hopefully it grows. And, you know, over time, I've made no secret of the fact that we're sort of downsizing now, as we're getting sort of more towards the sort of semi-retirement sort of thing and concentrating on other projects. And those properties that we've built up over the last sort of 20 odd years are enabling us to do other things now. And we don't kick out any tenants. If one becomes vacant, we make a decision, is this one we want to keep and relet, or should we sell it, you know, capitalise on it and pay the tax? It is what it is. I always regard equity as free money, even with paying the tax on it. It's something we haven't had to work for. You just sit and wait. And that's paying for some very, very nice holidays and things that we're doing there, you know, and world cruises and all of this sort of stuff. So I think just simple long-term buy and hold is probably the most underrated thing in property at the moment.
Completely agree. If you don't get the excitement, it doesn't feel like much is happening month to month, but then you get a few years in and go, oh, this is great. And if it's the excitement of the people vomiting on mattresses variety, I don't know if I want the excitement anyway. I'd be quite happy with my boring portfolio, thanks. I've really enjoyed this chat. Thank you. And you've been investing for a long time. You've been in mortgages for a long time, but you mentioned other projects that you're working on now. Can you say a bit about those?
Yeah, I've been in property for over 20 years and mortgages for 12 years now. I'm running the mortgage business, and I get itchy feet about every 10 years, Rob. So time has come for me to sort of like do some other projects. And before all the lockdown, I was taking a bit more of a step back and looking at other things that I wanted to do anyway. And then the property market just went crazy in lockdown, so got fully back into mortgages again over the last 12 months or so. But that sort of definitely cemented that I wanted to stretch out and do other things. So I've got a really great team in the office, as you know. They're great. They know far more than me about the current marketplace where mortgages are concerned. And that's, you know, the epitome of a business owner really, is that you've got such a good team that you can sit back and say, I don't need to be there all of the time. So I just sat back and started looking at some of the other things that I wanted to do. And really, it was twofold. And ironically, what I've actually been doing for the last 20 odd years or so was social media and consultancy. So it's just what I've been doing as either sort of like freebies online and groups. We mentioned Singing Pig, Property Tribes, you know, various forums and things that I've been on social media over the years. And the consultancy, I've been sort of doing that as either a property investor or as a mortgage advisor for a long, long time now. So I just wanted to sort of more formalise those. So I've got 2 spin-off sort of businesses. I've got the Mortgage Mama brand, which is my sort of social media. I've got a podcast. We're launching on YouTube this month. TikTok, oh my God, proper down with the kids. So we're launching on those platforms. I've got a whole sort of Mortgage Mama brand going on Facebook and Instagram. So just look for Mortgage Mama there or follow me on Facebook. And then we're just about to launch a website where effectively I guess sort of clearing out everything that I've collected over the past sort of 20 years or that's been useful. And over the years, I've been asked, for joint venture agreements, loan agreements, what documents we use as landlords and managing agents and all of this lot. And basically, I've just chucking all of these out there for people to come along and buy, and at really good prices. We're not sort of like charging 500 quid for a JV agreement and all of this sort of stuff. They're going to be very, very affordable. So all of that's going out under that brand. And really, it's a culmination of all the stuff that I've collated and has been in my head for 20 years, getting out there onto social media. And then a more formalised sort of consultancy service. You can read more at lisaorme.co, and that's my consultancy. And again, that's just sort of formalising. I get a lot of people say, oh, can I ask about this? And I'm happy to pay you for it. So that's aimed at sort of property investors, and they might be thinking about growing their portfolio. Exit strategies is a really common one. They're moving into limited company approach and all of that type of thing. So more doing the consultancy, but also other mortgage brokers. I've had a lot of mortgage brokers ask me for help and things, and can I come and pick your brains over the last sort of 10 years. And again, it's just sort of spilling out what's in my head onto paper or into some form of consultancy. So I'm doing consultancy for mortgage brokers and mortgage advisors and help them achieve what I've done, really, which is a proper sort of lifestyle business and that sits and runs itself. So yeah, and the two sort of dovetail together quite nicely, but it's really exciting. I feel like I'm getting all energized and doing some exciting new things, and it's really interesting working with sort of the younger generation, the under 35s, and seeing their sort of approach to it. So really, really enjoying it.
Brilliant. Really good to hear. And we'll make sure we link to all that, including the podcast, which I've listened to and is great. It's one to kind of listen to with a pen and paper about 3 times, because there's so much knowledge in there. About 15 minutes, it's a proper data dump, but it's great. It's so good. Clearly, you've picked up so much experience over the last 20 years, and it's really good that you're passing it on in all these various forms. And thank you for doing that on this interview today as well.
Thank you. It's been really good fun. Really good. Thanks so much, Rob.
Well, thank you, Lisa, and thank you for doubling up and joining us for 2 podcasts. She won't be with us next week, otherwise we'll start having to credit her on the podcast. But fortunately for Hub Extra this week, she has her own podcast, as you've heard. So if you'd like to hear more from Lisa, then check out the podcast Mortgage Mama. You'll be able to find that by searching on all your podcast apps. Give it a listen and give her some support.
Well, I've really enjoyed this pair of episodes, but I'm sure you're going to enjoy next week's episode as well, where we're getting back into a topic which is weirdly one of our favourites and really important to property investors as well, which is inflation. So please join us for that one, same time next Thursday, and we'll see you on Tuesday as well for Ask Rob and Rob. We'll see you soon. Bye-bye.
Bye-bye.